All right, let's get right into it. The tech world is buzzing about the semiconductor wars, right? It's this epic battle between Intel, TSMC, and Samsung. Well, Intel just made a massive and frankly a really clever strategic move involving its subsidiary Altera. We're going to dive into the official SEC filings to deconstruct this high-stakes deal and figure out what it really means for the future of chip dominance.
And that brings us to the big question, doesn't it? Why on earth would a behemoth like Intel sell off a controlling piece of one of its own very successful divisions? I mean, on the surface, it just seems odd. But the answer, and trust me on this, reveals everything about their master plan to win the chip race. It's a whole new playbook.
So, here's how we're going to break it all down. First, we'll look at the big picture of Intel's restructuring. Then, we'll get into the nuts and bolts of the Altera deal itself. We're going to unpack their smart capital strategy, look at the global risks and the government cash involved, and then we'll tie it all together to see why this is such a game changer.
Okay, let's kick things off with part one, the restructuring. And for this, we're going straight to the source, the official transaction agreement.
Here it is, the key fact that sets this whole thing in motion. On April 14, 2025, Intel put pen to paper. They signed a legally binding agreement to sell a controlling interest in Altera. This wasn't just a rumor. This was the official starting gun.
All right, so let's deconstruct this deal. You might be wondering, what does Altera even do, and who are the key players in this transaction? Let's get into the specifics.
So the heart of Altera's business is a fascinating piece of tech called an FPGA, or a Field Programmable Gate Array. Now, what the heck is that? Well, think of a normal computer chip as being set in stone. It does what it was built to do, period. An FPGA, though, is like a chip made of digital clay. The customer can actually program and reprogram it after it's been made, shaping it for very specific jobs. This makes them absolutely crucial for fast-moving fields like AI and 5G.
So how did they actually pull this sale off? Well, it wasn't just a simple transaction. It was this really slick, three-step corporate dance. First, Intel spun Altera out, making it its own standalone company again. Then, an investment firm swooped in and bought a 51% majority stake. And finally, both parties immediately pooled their shares into a brand new joint venture. Pretty sophisticated stuff.
Let's make this super visual. Before this whole deal went down, the picture was simple. Intel owned Altera, 100%. It was all theirs.
And boom, here's the aftershot. The ownership structure completely flips. The investment firm now holds the controlling 51% stake, while Intel keeps a very significant 49% piece. Now, this is the crucial part. Intel gets a huge pile of cash today, but they still have skin in the game. They get to profit from Altera's future success without having to manage it day to day.
Which brings us to the most important question of all. Why? Why give up control of a valuable asset? Well, the answer lies in Intel's grand strategy for the future, a playbook they actually call Smart Capital.
Their own filings call this a transformational initiative, and if you read between the lines, the goal is crystal clear. Cut costs, get lean, and pour every spare dollar and engineer back into their core business. And what's that core business? Winning the incredibly expensive race to build the next generation of CPUs for PCs and data centers, the very chips that will be made using advanced processes like their 18A node. This Altera deal is all about funding that fight.
And this is that smart capital strategy in action. It's basically Intel's new philosophy for surviving in a brutally expensive industry. It means finding clever ways to fund your massive ambitions by using every tool in the toolbox: outside investors, government incentives, customer money. You have to, right? When a single new chip factory can cost over $20 billion, you'd better be creative with your cash.
So at its core, this Altera deal is a textbook smart capital move. Intel is trading a bit of control for a whole lot of immediate cash they can turn around and pump directly into building those next-gen fabs and R&D. But they still hold on to nearly half of the company, so they don't miss out on its future growth. It's a classic case of having your cake and eating it too.
Now, a decision this big doesn't happen in a bubble. You have to look at the bigger economic picture. And as Intel's own documents show, the global landscape is, well, it's complicated. And that's where both risk and government incentives come into play.
And man, when you read their filings, you can really feel the pressure they're under. They list a minefield of risks: geopolitical tensions messing with trade, fragile supply chains, a wildly unpredictable AI market. They even admit that if they can't land big customers for their new foundry business, they might have to scrap some of their future technologies. The stakes are just incredibly high.
So how do you bet billions of dollars on the future when the world feels so chaotic?
Well, this is the other side of the smart capital coin. You get some help. You use government support to de-risk these absolutely massive projects.
And we are not talking about a little help here. We are talking about $7.9 billion. That's what Intel has been awarded from the U.S. CHIPS Act. Now, this isn't just a handout. It's a strategic investment by the government to bring cutting-edge chip manufacturing back to the U.S. And that money flows directly into the very fabs and R&D that the Altera deal is designed to fund. See? It all connects.
Okay, so we've covered the what, the how, and the why of this deal. Let's zoom out and wrap this up with the key takeaways, what this all means for Intel and for the entire tech industry.
So here's what you really need to remember. First, this is about strategic partnerships. Intel is signaling that it's smarter to share the risk and reward than to own everything outright. Second, this is about funding the future. This deal is a war chest for the multi-billion-dollar battle against their rivals. Third, it's about laser focus. They're clearing the decks to concentrate all their firepower on winning the core chip business. And finally, this is a new playbook. You're watching a legacy giant learn how to be agile and financially flexible in a crazy, fast-moving world.
And that leaves us with one final thought. This whole model, spinning off assets, creating joint ventures, using public funds, it's a powerful formula for navigating the future. So as titans like Intel retool for the age of AI and intense global competition, the real question is, who's going to be the next to make a bold move just like this?